Okay, so you're probably wondering why I have Google pulled up. But as a real estate agent, I think it's just important for you guys to have a little bit of understanding behind interest rates. And so much of this is public information. It is so, so cool to be able to send this to a client and they can see it for themselves. So if you go to Google and you type in Fannie Mae, I don't know if you guys can see this, but I'm typing in Fannie Mae LLPA for loan level pricing adjustment. This is the first thing that'll pull up. So you can see here, you can probably barely see it. It says Fannie Mae LLPA. And then if you click here, it says, what is the loan level price adjustment? And what will pop up is this matrix. And basically what this matrix is it's Fannie and Freddie's way of basically saying, if your FICO score is this, or if your down payment is this, this is how we are going to make an adjustment to the rate. Not that I expect you guys to be mortgage nerds, but I just want to show you this one chart. So over here, we've got the credit score. So these are the tiers. Top tier is a 740. It doesn't matter if someone has a 740 or an 850, they're going to be in the top tier. Then it goes down to a 720, 700, 680, 660, 640, and 620. If somebody is putting down 5%, they would be in this section here. So from a lender perspective, 5% down means that they're financing 95% of the loan. So that's the risk for the lender is we are providing financing 95%. If they're in the top tier, there is still going to be a 0.25 adjustment to the interest rate. If they're in a 720, it's going to be double the adjustment. If they're a 700, look at this, it doubles. Then a 680, it's a 1.25. And once you get down to the 660, this is why almost always, if someone has a 700 or below FICO score, we're typically going to take them FHA, not because they have bad credit, but because the interest rate in PMI insurance is so much cheaper that financially it's the smarter financial decision. But many of the listing agents see an FHA pre-approval letter and think that that client must have horrible credit or reserves or whatever, and that's not always the case. This is a change that's taken place with interest rates when it comes to conventional financing. Here's another thing I want to point out. So 20% down with a top tier, look at this. The adjustment is higher than if they were to put 5% down or 15% down. This is a new change that because the banks can't charge PMI insurance, this is no longer the most attractive interest rate that a client can get. In fact, unless you put 40% down, that's when you're going to get an interest rate with no adjustments. Again, this is all public information. If you come down here to an investment property, if you put 20% down and you're in the top tier, look at the interest rate adjustment on that. So this is public information. I encourage you to just be aware of it. We're in a market where everyone is alarmed about interest rates, and I just thought you might want to know. So if you guys have any questions, just let me know.